Katie used to do this all by herself.
Good afternoon.
No. She could even imitate me, probably.
Well, good afternoon. We'll get started today with Lynn with the director's cut. We have August production numbers.
Thank you, Bethany. And I want to welcome our new public information officer, Jessica. She's going to be taking the controls on the director's cut in the near future. So if you're in the room, you got to meet her. If you're not, you'll get introduced virtually somehow. Thanks everyone for tuning in or joining us for the director's cut. We're talking about August production. We're always 2 months behind because of the reporting and correction requirements. So really almost dead flat on the crude oil production, less than 500 barrel a day increase. And so actually, I guess about 700 barrels a day. I want to correct that. So I just considered it flat. It's a preliminary number, and it may go up or down a little bit, but it isn't even a 1% change. I think the good news, it's exceeding revenue forecast by a little over 7%. So the revenue forecast was based on 1 million barrels a day, and at 1.073, we're 7.3% above that. So both the volume and the price are exceeding the revenue forecast. August oil price, North Dakota market was $90.34, and Justin will have a little more information to share about that, but that exceeded the revenue forecast by 81%. So some conversations with some legislators yesterday in Watford City, the comment made was all the buckets are full. And so if you know how North Dakota plans to use oil and gas revenue, we learned from the boom and bust of the 1980s not to count on oil and gas revenue for ongoing bill payments, but to put the money in buckets and then spend it out of those buckets, usually late in the biennium or the following biennium. Gas production actually down about 1%. I think largely what we're talking about there is we had some plant outages and some turnarounds. And so the gas oil ratio just really didn't change from July to August. But I think Justin will talk a little bit more about that too, that it continues to march upwards. It's following the trend that was established when it was modeled about 18 months ago. Permitting has settled back into the 50 to 60, 70 range. So it's very steady, steady stream of oil and gas drilling permits coming in. The rig count essentially unchanged. We got a couple rigs moving, so we're at 43 today. Just a reminder, the all-time high was 218. And so those 43 rigs can do the work of probably 85 to 90 rigs during that boom time. We actually have 2 wells being drilled on federal surface. And I always like to track New Mexico. Those are the folks that just passed us this last year. They're at 113 drilling rigs. And so again, people continuously ask, well, where did all the rigs go? They went to the Permian. And so Texas and New Mexico have seen, with the high oil prices, a continuous increase in drilling activity, unlike North Dakota. Waiting on completion, essentially no change, and inactive wells, pretty much a no change there as well, about 60 more inactive wells, so nothing much going on there. Steady stream of newly completed wells. September's number looks like it's going to be up some, so we would seriously anticipate we're going to see an increase in production for the September report, which will come next month. But we're exceeding the revenue forecast by about 62% there as well. So we're at a record number of producing wells, but not a record production. And that just, speaks to a mature play where we're just replacing the decline. We're at 45 rigs and 15 frac crews. We're just replacing the oil decline of the existing wells with new wells coming on. A little bit of an uptick on Fort Berthold, 2 additional drilling rigs there. So we had basically 2 rigs move from outside Fort Berthold onto Fort Berthold. It's an even split between trust and fee lands on the reservation. little bit of a decline in Fort Berthold production, but very, very slight. And very few wells waiting on completion on Fort Berthold. We're down to only 17. So the majority of those 450 are off Fort Berthold, and interestingly enough, a third of them are one company. So we've been working with them and having conversations, trying to figure out what their pace is going to be in terms of completing those non-completed wells. And they're only operating one frac crew. So they're not looking at a very high pace of completing those wells. Dominantly, what's holding them back is gas capture. They're building two very large compressor stations to take the gas from the 150 or so non-completed duct wells that they have. And the first one of those is very near completion. The second one won't be completed till the end of the first quarter of next year. So expect that activity to pick up once that gas capture is in place and they've got the compression to move the gas to market. But they're just not willing to even take advantage of the IP or the IP extension that we have in our gas capture requirements. A little bit on comments then. Drilling rig count has just stalled out in the mid-40s, going to hang there for the rest of the year. Completion crews, like I said, only 15 operating. Interesting news from OPEC. OPEC had talked about increasing 500,000 barrels a day, increasing 500,000 barrels per day. Then they cut that to 100,000. Then they canceled that 100,000 cut or 100,000 increase. And now they went for a 2 million barrel a day decrease, looking at the fact that OPEC is convinced that the world is either in or sliding into recession, and that's going to reduce demand. And we can kind of see that in storage volumes around the world, but they're still below normal. Activity is just normal for these oil prices. Gas capture is in good shape. We lost a little bit of ground in Big Bend, the one field. So the same 4 fields that are holding down our gas capture are on the list, and we will be meeting with those operators over the next 3 months to have conversations about why we're well below the 91% on those 3 fields. Big Bend is because of the August turnaround at Robinson Lake. And that was the only place for that gas to go. And even though the gas plant came back on and they had an alternative to move some of that gas to Outrigger, they didn't have the compression in place to move it from Big Bend to the plant. So it's a string of pearls, and if any one of them is not in the right place or the right size, then the whole system sort of crumbles down. One thing to talk about on the federal front is we received an email from the U.S. Department of Justice that by the end of October, BLM is going to come out with a new venting and flaring rule. So we've been in litigation with BLM over venting and flaring for about 6 years now, if I am counting correctly, and that saga will continue. So we're anticipating that by the end of the month, we're going to see a new venting and flaring rule out of the Bureau of Land Management. It is just a continuous game of what's next with the Department of Interior in terms of erecting barriers to increased oil and gas production on federal lands. And this will just be the latest round. I should also mention that they did not hold a third quarter lease sale. So their deadline was September 30th to have a third quarter lease sale, and there was no third quarter lease sale. So there's going to be at least 2 pieces of litigation, maybe 3 going forward with Department of Interior. One of them being, the ongoing venting and flaring. We have the case that's still in federal court, asking for a writ of mandamus, ordering them to start following the law and holding the lease sales. That was put on hold by Judge Traynor because of what was going on in the Louisiana litigation. The Louisiana litigation was recently a new ruling by the Fifth Circuit in the federal Fifth Circuit, and they explicitly stated that only the states who participated in that litigation were affected by their decisions. So now that removes that uncertainty from our litigation, and we're going to try to move it forward. Along with, we're looking at some litigation surrounding the, what do I call it? The settlement agreement that was reached between Department of Interior and the Wild Earth Guardians, which basically said, okay, we leased federal minerals in March, but we will not issue drilling permits for the federal minerals that we leased. So those are the three pieces if they go forward. We had a few questions that came in via email, so maybe I'll answer those, then we'll see if any more happen. Dave's in the room, so he might have a question or two. We'll see. So one of the questions was, what are we hearing from producers about growth, no growth plans for the Bakken in 23? Basically, they're telling us the larger producers plan to hold their production flat. Everyone from Hess to ConocoPhillips planning to hold their production flat. Continental Resources is looking at maybe a bit of growth, as is Devon. So flat to no more than 2% in 2023. Permitting applications, we have a steady stream of permit applications coming in. I think we've resolved a lot of the difficulties we were having with the North Star system, and so steady to up slightly. Labor projections are not good. Talking with the folks at Job Service, there are tens of thousands of jobs open in the state and not very many applicants. So we're going to go into 2023 with a serious workforce shortage, and that's just going to continue. It was nice to be in Watford City yesterday and look up on the hill and see the Career and Technical Academy under construction. They were pouring concrete yesterday. So hopefully we're on the track to start growing our own workforce here in the state. Also got asked about the Tier 1 area, the core geographic area of the Bakken, and what our anticipation is for that area. It's about 80% drilled up, so there's not a lot of drill slots left in that area. Projections are for that production to be held flat going forward. The encouraging thing for the Tier 1 area is enhanced oil recovery, and so we've got 2 EOR tests in progress. The Liberty Resources EOR test in Mountrail County is going to begin a new round, their second round of injections, first quarter of next year. And the Continental Resources EOR test over at Epping should be getting underway this month or next month. So 2 promising tests ongoing. Hess also has one, and they've gotten DOE funding, but they're seeking some partners to work with them in that EOR test. So if that comes about, then we'll actually have 3 different proposals testing 3 different produced gas injection schemes for enhanced oil recovery. And we're very confident, as are the folks at EERC, that over the next 10 years, someone's going to figure out the code to do enhanced oil recovery in the Bakken and Three Forks. So that's it looking forward. When we look out to Tier 2 and even some of the better Tier 3 areas, mostly shifting to 3-mile laterals. And that shift in drilling by the Whitings and the Oasises and the Grayson Mills and those folks should result in a 1 to 2% growth rate overall statewide in production. So Tier 1 flat, Tier 2 maybe pushing that 2% growth rate with the 3-mile laterals. We had a hearing talking about the new Tier 3 area up around Granora. Very high water production up there, up in Divide County. And they think that 2-mile laterals with different completion technology and abundant saltwater disposal is the answer there. So that area is not yet shifting to 3-mile laterals, but virtually all the rest of Tier 2 and 3 are. The companies I named told us that 75% of their drilling next year is going to be 3 miles. So that seems to be the new approach in the Bakken, that and enhanced oil recovery. Hope that answered those questions. Anything else?
Just so I'm clear, why were some tier 1, others tier 2, others tier 3? Was it geology or what is the delineation?
Oh yeah, thanks. So Dave asked, what's the delineation of tier 1, tier 2, tier 3? So tier 1 is what traditionally was called the core area. It's the best geologic area in terms of IP rates, but also it's got upper, middle, and lower Three Forks. So it's got the whole layer cake. When you move out into tier 2, the rock quality is a little bit less, and so the initial production rates were, probably 25-30% lower. 3 mile laterals have changed that. We're back to the same IP rates as the core area had with the 2 mile laterals, but it also gets down to only upper Three Forks. And then when we move out into tier 3, we were looking at with 2 mile wells, IP rates that were only 30-50% of the tier 1 area. So it's geology based, and out in the tier 3 area, there is no Three Forks. So it's sort of a combination of the quality of the Bakken rock, how much water it produces, and what kind of IP rates it'll give up, and then how much Three Forks do you have?
Now the oil price for right now is 85, 89, right?
Yes, sir.
So if this doesn't go above what is $94, something like this, we'll see that 1% reduction.
Correct. In fact, I think it was expected that September was the last month of the 11%. So October will begin back to the 10% oil extraction tax. And as long as we stay below $95, it'll stay at 10%. And, that's the projection. I only saw one set of hearing exhibits that were above $95 out of this last month. And that was only for the remainder of 2022. So nobody's predicting 95 plus for 2023. I think everybody is baking into the cake. We had a nice conversation about cake before we started. It must have been too long since lunch. Anyway, we were talking about cakes and cupcakes and cookies. So everybody is baking into their economic cake a worldwide recession or economic slowdown.
This is probably a very pedestrian question. But if OPEC is going to ratchet back 2 million barrels, it almost makes sense that maybe Bakken prices might go up a little bit.
Yeah.
But I suppose inflation is the big factor.
Yeah. So the question was, should Bakken prices rise a little bit with OPEC ratcheting back 2 million barrels? And the answer is, yeah, they should. We're at about $86. I think we're going to see them push back towards that August number of $90. And so don't be expecting much relief at the gas pump. And OPEC's 2 million barrel cut, and I stated in there, is from their projected or their allocations for all the countries. It really is only about a 1 million to 1.1 million barrel cut from current production. So it's a forward-looking cut from what they had planned to do in terms of allocations to the different countries. But in terms of today's production, it takes about 1% off of world crude supplies. So not a big slice.
And here we're going to give you credit for the gas prices dropping 10 cents.
Well, if we could unleash the Bakken, and really the best rock that we have is behind these duct wells that are waiting on gas capture, and underneath these federal leases that we just can't seem to unlock. That's the best rock we have. Thanks, everyone. Oh, wait.
Oh,
Can you-
Wait, there's more.
Yeah.
It's like a Ronco commercial.
Could you tell us, Lynn, which plants were undergoing maintenance in August?
Oh, yeah, thank you. The plants undergoing maintenance in August would have been Robinson Lake. And that was the only one, but it was a complete go to black turnaround. And then there was a significant interruption, if I'm not correct, in Eastern McKenzie or Dunn County or One Oak system. There was some significant downtime there that caused operators to cut back oil production to keep their flaring down. So, but the plant maintenance was Robinson Lake MPLX.
Great, we'll move on to Justin Kringstad with the Pipeline Authority.
You see my.
No, I can't see.
Perfect. Well, good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into a production update from around the Williston Basin. Lynn had covered the North Dakota side. Eastern Montana, this was an interesting. They did see some growth in oil production. Eastern Montana, they actually have one active drilling rig today, but that 52,000 barrels a day is, I believe, the highest since COVID hit. So that is at least notable. And again, we're going to continue to watch what happens with operators and their decisions on how to handle acreage in that portion of the play. And then South Dakota, 0 rigs and remaining very steady. As Lynn alluded to, the oil and gas numbers, very little change. Same with the gas oil ratio that we saw. Again, you can see that trend in the bottom half of this graphic. We continue to watch that and continue to plan accordingly, assuming that we're going to continue to see those gas oil ratios rise. In the month of August, looking at oil movements, we saw continued growth on the crude being egress options out by pipeline system and a little bit of a pullback on the crude by rail out of the Williston Basin. So we'll look at that on slide 5. Interesting, when we look at those Brent WTI spreads, again, a number I've said many times in the past, when that number is typically over that $5 to $6 range, we typically see some barrels getting pulled back towards rail. We did not see that, or we have not yet seen that occur. We'll talk in a moment about some of the pricing situations that have really advantaged North Dakota relative to what we've seen historically. So again, the marketplace in the Midwest is continuing to be extremely strong, particularly Clearbrook. That is driving those decisions, and I believe keeping a lot of those barrels on the pipeline systems that have that flexibility. So in the month of July, taking a look at the oil prices around the U.S. If you remember last month when we were looking at the June data, PADD 2 had higher, one of the highest refinery acquisition costs of anywhere in the U.S. That has pulled back here in the month of July. So back to more of a typical trend, again, that discount to a PADD 1, PADD 5. But we'll talk about that here in a moment because we're going to see some additional numbers that continue to point towards strength in the Williston Basin. On the crude by rail side, somewhere in that 60 to 70,000 barrels per day estimate, which if you want to translate that into a train, it's roughly a train a day leaving the Williston Basin. Each train can hold roughly 70,000 barrels per day. So just to put that in perspective. And then destinations, other than the 2 traditional markets, that West and East Coast, we did see it pop up in the month of July down in the Gulf Coast at PADD 3. Again, I don't know, and when I look at the fundamental drivers, I don't know that that's going to be a sustained situation. We'll keep an eye on it, but I suspect that we'll continue to see PADD 1, PADD 5 being the dominant marketplace. But now to talk about pricing, this was as of today. Again, looking at that Clearbrook price, phenomenal. Over $5 premium to WTI at Clearbrook being reported here in the last number of days. Again, these are numbers, if I would have been putting these up for years, it was always a discount. And right now, the forward curves, we don't see a discount on those forward curves for quite so. I believe it's 2025. I'll have to double check that, but for several years, or at least a couple more years of expected strong pricing. Again, at Clearbrook market, it's an interface between the Williston Basin as well as Canadian production. Canadian Syncrude in particular, if you're watching the price markets, has been incredibly strong as of late, at a premium itself to WTI. So that's continuing to push up that strength in the Midwest. When we take a look at the North Dakota average discount, that's a topic that's been up in conversation for years, really since the beginning of the Bakken play. In August, the smallest discount that since modern Bakken had really gotten going of $1.08 relative to WTI. Typically, there was a number of years where budgeting purposes, we would plan in that $7 to $8 discount range. The most extreme periods of time were in 2012, where we saw over $21 discounts to WTI. So this number of $1.08 discount to WTI is incredibly strong, strongest, as I mentioned, that we've ever seen. Again, it's tough to predict what the markets are going to do and how sustainable that is. But now in 2022, we've had 2 months. It was, I believe, April as well as now August that were sub $2 spreads to WTI, which again is certainly helping the Bakken remain competitive against some of the other plays around the North America. Imports, exports, nothing really new here. Continuing to see in the month of August 0 movements north by truck for either blending purposes or getting on a pipeline system up in Canada. And then taking a look at slide 11, switching gears to natural gas. And I'll add some more color to the gas situation. I was very pleased to see the flaring percentages not change in the month of August, given the amount of gas challenges that the industry was facing. So Lynn had talked about a couple of the gas plant outages and struggles on that front. But then also the northern border had the unplanned event at Zeeland, North Dakota from August 14th to August 19th, where they had to reduce capacity because that compressor station unexpectedly was taken out of service. The system itself lost over 300 million cubic feet of gas capacity during that window. And so translating that back, there was a lot of uncertainty leading into these numbers coming together of what North Dakota's numbers would shape up to be, whether we'd see an increase in flaring. I honestly was expecting to see some modest increase, and it didn't happen. So again, very pleasantly surprised at the discipline and what we're seeing out there. Some of the ways that the companies were able to handle that, I'll touch on that in a moment, of some of the strategies that I think that led to that strength and being able to hold production steady. So slide 12, now 5 months straight of this flat 6% flaring, which again is very encouraging. In August, we saw more wells producing natural gas than wells selling gas. So again, we'll keep an eye on that as we get into the September numbers and October numbers. It's not a large difference, but again, anytime we start to see trends where there's a disconnect, that becomes concerning. But we're not there yet, but we'll keep a close eye on it. And then some questions that Lynn had gotten about oil prices. This is at least how the EIA is looking at it. They are expecting, especially with recent announcements, what's happening at the global macro level, some strengthening in prices as we head towards Q4 or continue out this calendar year and move into 2023. So not substantial, not up to the numbers we saw earlier this year, but just slow continued growth as they look at how OPEC's decisions, how managing the SPR here in the US, and how that's going to influence those macro level price drivers. On gas processing in the state, again, things are looking very steady, at least in the near term. We're continuing to work on those next set of solutions out there, which we expect to be required here in the next 2 to 3 years. On the Bakken gas infrastructure, I'll just quickly note, again, when we look at those August numbers and given all the gas challenges we were having, particularly in northern border, I was digging in to try and figure out how did the industry manage to do so well. One of the strategies, obviously, during that window of time, there's some indicators that companies were leaning out their gas when they had a reduction in capacity. They were able to manage some of their NGLs, particularly ethane. if they could get that out of the stream as much as possible, that was able to free up some space, minimize the amount of residue or dry gas they had to put on the northern border. So some of the strategies like that, delaying until later in the month, coming on heavier. So all those things coming together for, again, I think the best possible scenario we could have had, given the number of challenges on both the local processing and then those larger transmission issues. Taking a look at border market share, still now north of 70%, roughly 75% North Dakota gas exiting on northern border, remaining 25% being Canadian production. On the BTU side, still remaining above or below that 1100 level. We'll keep a close eye on that. Again, that's that level that the downstream markets and northern border had indicated was potential ceiling that they may look to implement in the future if there's a market need to do so. And then slide 19, this was just some of those details of that Zealand outage. Again, just a repeat of some of those numbers, but again, something that wasn't expected, unplanned, and those are very, very challenging for an industry to react as quickly as it did in order to keep production flowing. So with that, that'll finish up any formal remarks, but I'm glad to answer any questions.
Go ahead.
Yeah. This is just a weird question, I'm sure. Do you find that most of the flaring is coming from traditional oil wells or from Bakken wells?
So the question was, where are those gas flaring volumes coming from? Whether they're coming from traditional vertical or they're coming from the Bakken Three Forks. It is almost exclusively coming from Bakken Three Forks. Just given the amount of wells, the volumes, yes, it's coming from the modern wells.
The reason why I asked is I drive out to Roosevelt Park and I see those wells along Dickinson, on Dickinson Interstate.
Yep. And
I see some flares there.
Yep.
So.
Yep. And that's you're really at the southern fringe of the Bakken Plain. As you'd go north, you'd certainly see more instances.
Well, those are not necessarily traditional wells.
No, no.
Justin, can you tell us, are there any gas plants going into maintenance in Q4?
In Q4, so I know on the natural gas pipe, I'll talk about residue dry gas lines here first, because that's what I've been digging into most. On the Alliance pipeline has a number of events here in the month of October. We've already gone through one. We're in the middle of a second, and then several others throughout the remainder of the month. And so far, those have been pretty minimal as far as impacts to North Dakota. We rely far more heavily on northern border than we do Alliance. But to answer their question directly, I'm not aware of any gas plants in Q4. Once you get to Q4, even for the residue pipelines, November, December, you're really starting to fight with winter at that time. So they typically try to take care of those maintenance events much earlier in the season. So.
You know what the current price of natural gas is?
So I have it for Henry Hub, which is $6.57 about midday today.
I could ask you again about continued interest in what I heard referred to as Bakken East.
Bakken East, that is the first time I've heard that term, but
so you heard it the same time I did.
Sounds like Dave is naming a pipeline for folks, but yeah, so there are companies, and I can say confidently they're sharpening pencils and working on refining estimates on costs. We've seen, thankfully, some steadying, some plateauing of inflation on steel materials and some of those other input costs. There was a time period where every month it was going up, your energy inputs, your material, the steel prices continue to march up. We've seen some plateauing of that, which helps give some confidence then to some numbers. And you need that confidence in order to go out to the marketplace with any type of price discussions. So that has been one good step. And then again, folks are actively working it and actively, like I said, sharpening pencils and trying to get some better terms and better understanding of who those players might be and what that might look like.
I've also heard some whispers that there might be another ask for the legislature to up to 150.
So during the legislative special session, 150 million allocated. Then there was some additional language from the legislature that they would come back and take a look at what else was necessary. So I'm fully expecting those conversations will be had.
Thank you, Justin.
Okay, thank you all. Yep.
I wish I could take credit for Bakken.
Bakken East, there you go.
I heard Ron Ness calling.
Okay.
I'm gonna have Lynn come back and answer one more question that came in here.
Yeah, so I missed a question that we had earlier, and it came in via email, and it was about with the decrease or the flat oil and gas activity, are there activities? What are the activities that the department is pivoting to? What else is going on? And I would have to say, number one is value-added natural gas. Very focused. The Industrial Commission is focused on that, on getting some infrastructure built. But there's a great deal of interest in salt cavern storage. Had some conversations yesterday again about that, and you may or may not have heard, but I would encourage you to go take a look at John Haryu's presentation to the Energy Development Transmission Committee day before yesterday on the results of the halite number 1. Very promising in the 2 salts that they cored, and so that work will be finalized by the end of this year. Legislature is very interested in what the next step is, as is industry. And I think we're going to be putting together a proposal for them to spend some money out of one of those buckets on actually drilling and building a salt cavern as a test salt cavern, at least 1, maybe 2. So that goes along with the hydrogen hub. There's a lot of activity, a lot of interest in hydrogen in North Dakota. We already have the DGC plant that makes hydrogen. Both of our refineries make hydrogen. And if the DGC plant converts from making synthetic natural gas to hydrogen, it's going to need salt cavern storage as well as carbon storage. So that's a really exciting area that we're working a lot in, and probably we'll be asking to put some state funding into salt cavern testing, as well as some state funding into beefing up the department in carbon storage. So carbon storage projects are coming in on just a regular basis, and we're reviewing a new application now, a preliminary application that came in for Blue Flint up at Underwood. So we'll be holding hearings on that. That's a major activity that we're spending a lot of time on. And then looking, maybe a little further out, the Geological Survey is very, very focused on critical minerals. And I think we're going to see a proposal in the legislature to do some, really do some core holes and do some serious testing of the critical mineral potential in southwestern North Dakota. So up to this point, we've collected a couple thousand samples, all from outcrops, and we're going to collect another 1,000 or so from outcrops. But in order to really test our